an intraday basis. You can clearly see, though, it did stop out on a trailing stop function, and market went back up at the end of the day. So, but it went flat into the weekend. What's not flat is, of course, the spider. Now, the last video we updated you, went short, had a profit, reversed. Jerome Powell went long, had a profit, took a minor hit, and then went short again. And that's going to happen with trade systems every once in a while, or to all traders. And you got to probe the market until, you know, sometimes you're going to get these. We can't tighten these stops. I guess we could, but, you know, if you tighten up stops too close, for example, let's say we took a tight stop here. What would happen if you put your stop underneath the swing low? It would have stopped you out and you would have missed more just enormous profits to the upside. That's what the system does. So you kind of got to take the good with the bad and know that the system, if the market goes into a trend mode, it will keep you in the trade. That's the key element of making better trade decisions. The neat thing also about an algo system that we teach all our traders that come visit our live trading room is simply this. You can utilize the signals, know where the stops are. If you look at this, you say, person, there's so many lines on the chart. Which one? What do I know what it is? Well, it's real simple. This is the entry. The first red color would be the first stop, then a trailing stop. This is the emergency stop, a trailing stop, a trailing stop, a trailing stop, and the trade finally in that long position got out right there. So in this case, here's the initial entry on the latest new trade that the market took and the reversal to the short side. There's the current stop in place right now. So the play is that we're short the market. Neat thing here is this yellow line does not belong there. This yellow line, I can move it. This is a very important yellow line. I put that in the live trading room for two reasons. A, it depicts a very strong, what we would call support and resistance line. This is where we saw old resistance up in this zone right there. Old resistance there. That's number one. Number two, old resistance then turned into new support. We closed below it. We didn't just trade below it and then snap back. We closed below it. So we left Friday with the door open on a new wide open lower close below prior support resistance swing line, and it's targeting the profit down here, which, by the way, you'll notice there is a gap in the charts. This is from a week ago Monday. So we stand a chance of seeing the market fulfill a gap. The volume indicator, by the way, and this is one of the things that we talked about in the video before, divergences galore. Who's going to get it right? The SPY traders or the volatility traders? Well, in this case, the volatility traders got it. They got it really right. And a nice move for our community. So I hope everyone enjoyed that. More importantly, let's go back and take a quick look at Friday, and then we'll go through some sector wrap-ups really quickly. The euro currency had a well, it was a good week for a 10-minute system. We caught a nice long side trade here on the Fed minutes or Jerome Powell's speech. Caught a nice short to the downside. And one of the things I want everyone to realize is we could run this thing all day long, but do take a look at this system only generates trades between 8:50 in the morning and 2:35 in the afternoon, and always gets out, as you see, exits end of day. This is based on the Algo 17 program that's available for retail traders and institutions with a disclosure that you need to sign that says that you won't sell it. But needless to say, this is the Algo 17 program that we have for our traders. It allows them to kind of develop and backtest and optimize their own and maintain their own trading system. So this is exactly what these are built on, and this is what we have in our Algo live trading room running each and every day. So how did the system perform? Well, let's take a look at the first and foremost. We'll go up here to the system if I can see things correctly. There she blows. So on the week, this is what, again, this was a rollover model. We went from the March contract to the June contract. So I want to take a look at what did the week perform for us. For the week, and you can see this says weekly here, weekly. Two lots in a very strange marketplace trading 2 lots during those trading hours performed with a $1,300 profit at the end of the week. So we want to make sure that if the systems are making the right decisions, if they're getting good trades off, how are they performing week to week? That's what we got to look at. Crude oil. This is our 5-minute model. Had a couple little hicks on the downside and then finally caught a really nice trade at the end of the day. How did it perform for the week? So for the week, we have from 317, by the way, the performance graph is off the charts for the year. This goes back, again, showing you what the week is doing. So last week, we're up $1,680, and this is the May contract. Remember, crude oil rolls over every single month. So on the week, a 10-minute, again, same structure, doesn't trade 24 hours. These are the signals that we take in the live trading room while the room is open. That's the key. Same structure, only trades between certain hours, doesn't take new trades after 2 o'clock in the afternoon or 2:30, and always exits any trade at the end of the day. Now, we have our 15-minute model here, and this was the, again, big week for the S&Ps for this week on 2 contracts. Now, I know everyone could say, or probably add a comment and say, I can do better than that. Well, that's fine. I'm sure everyone can, but it's not as easy as that. Besides, we're not trading a lot of contracts. We're trading 2 contracts. So the performance graph for the beginning of the year is not bad, up a new equity high for the year this week. The performance summary, profit factor on longs, because the market's gone up most of the year, is 4.02. 83% of the trades are profitable on the long side. 67% of the trades are profitable on the short side, but a small profit factor. Why? Because the market hasn't gone down that much. That's the nature of the beast. So, but the periodic returns, if we take a look, how did the week end? A great week for the system. And this was a tough week, both long and shorts. And then finally, on the 5-minute model, which is what we have, it caught the trades on the downside, a quick little upside. It caught, as you can see, most of the trades on Friday were all blue. It caught the upside. It got clipped on a little short here, as you can see, a red line. Let's take a look at that. If it's a red line, it's a loser. If it's a blue line, it's a winner. And on Friday, this thing, what it does is this model scales out of half the position at the profit, and then the other half is a scale out feature. Why is it out here? It's the end of the day. Systems get out at the end of the day. So if you only take one trade, you probably wouldn't be happy. And that's one of the things that we want to make mention is the reason we have this up is so that traders can say, gee, if the volume action doesn't look good, should I take a long? If the volume action looks great, maybe I can go with that. So the volume action is starting to show a slight uptick, so that's a good trade. Going short when the volume is rising is probably not a good trade. Going long after a breakout, maybe you want to try it with a tight stop, by the way. That's the stop. That makes sense. But when the volume action starts to change and goes negative, like it does right here, let's take a look. You can see the trend line, the volume's going, the momentum goes red on us, and then you have a short. So look at this trade. Here's the entry. Here's your stop. That's what's posted in the room. That's what's projected on the screen, and then fires off what the potential profit target is. And these yellow lines, those are the last conditional change with the trailing stop function, and this gets out at the end of the day. Great trade. So now here's the on the board, the only thing that we hold is our swing trade model, the VXXB, flat for the weekend. Great trade, by the way. It had a couple losers in there, but boy, it really kicked into high gear, as you can see with the trailing stop function. So the only trade open is the Spider, short 353 shares. This is the trade. If you're an option trader, you might want to take a peek and come and visit the room and subscribe and sign up. One reason is that if you are an option trader and you see that this gives a swing trade model, this might help also to do what? Give you clues that if the system's short, maybe you could look at buy a put, do a credit call spread, take in some premium, and then try to ride until the trade exits itself. That's a way to piggyback signals using options as well. Another function that we try to give people in the trading room. So let's move forward and look at how did the week end and what do we see moving forward. Let's take a look at our other analysis tools. All right, so let's take a top-down approach right now. We've got we left the S&Ps with a close on the low for the week. We left it with also a PPS sell signal. Now, we did not get a sell signal per se in the Qs. We did get a bearish quasi-engulfing pattern. It still closed less than the prior day's low. The Dow Jones Industrial Average left us with a double top up in here. And as you see, the NYSE is a sell signal. The NASDAQ Composite not just generated a sell signal, but also a very formidable pattern called the low close doji. That's a doji. Market closes below the low of the doji. That is not an evening star pattern. That is my proprietary low close doji pattern, which we've published, written about in every book for the last 20 years. So there it is, the low close doji. Also note that the divergence in the breadth as price made a new high, breadth made a new low. So we did close with a weaker close on a daily basis in the advanced decline. We made a negative zigzag. It's kind of like we made a lower low pattern, so zig and zag. So on the NYSE, that might, because of that pattern, now we'll see if, again, the next, if we do see follow-through weakness, the, of course, corresponding support, and the next support will be probably right back down there to test the low. I think that's an obvious for most people. It's the Russell over here. Let me expand on that chart. Let's take a look at this in a little bit deeper detail. First, we broke down. The advanced decline did not break down significantly. The price action broke down probably more than the breadth or the advanced decline broke down. A volume did not exceed that line, the previous low. So to be honest with you, we may be a little oversold here, but here's what I'm kind of looking at. I'm looking for a pullback. These are lines in the sand. Those are the areas in which we broke out. You could see there's one, they're not exactly perfectly horizontal, but there's a lot of, just a lot of great chart support in that zone right there. So call that between 144, 146. That's where I think that the market's going to find some value. This low, that low, this consolidation area where it chopped around back at the end of January, that would be the more likely spot that the market wants to come down to into the Russell. So the question now begs, if the Russell goes down to its, let's call it the monthly lows and took out those monthly lows, bring that chart back. So here we are. We took out the monthly lows. What if it leads as a leading indicator? What if it leads the S&Ps to want to have that index test its prior monthly lows? Well, that gets us to around 270, by the way. So did we break down in the advanced decline enough, and was there a strong enough volume associated with that breakdown to want to cause more selling pressure in the S&P 500? The answer is not enough information right now, because it was just one day in the S&P 500. You can see only 73 stocks were positive on the day. We left 423 negative. The prior day, we were like 449 with 55 stocks that were negative. So quite frankly, we didn't completely reverse the positivity movement here to the upside on Friday's decline. So in other words, I think that the price action, looking at these indicators, if I read into this, may have over-accelerated on Friday. And if there's no real big positive news on, maybe if it's not China, if there's a delay in any of the talks, or more talk about the reason why the Federal Reserve needed to lower rates, they were concerned with the economy, then perhaps we'll get some follow-through selling. So Monday's going to be kind of a key critical day. But if we use the Russell as a guide, then we probably stand a 60% chance that we come back in this zone right there, which is around 272, and the spiders will keep you abreast of the market. Now, let's go and take a look at other areas. What generated new fresh sell signals for the week? On the week, I want you to look at just this radar screen, because this radar screen shares with me a lot of great information. It tells me how many stocks or sectors, ETFs that I'm looking at, formed new fresh weekly sell signals by the means of my PPS indicator. And by the way, if you are a Thinkorswim client, you can find the PPS indicator through my name on the TOS platform. So here's a very, very popular indicator, widely used by not just regular retail traders, but also institutions. And because of its capability of, you can run a scan and find out how many buy signals there are, how many sell signals there are, and pinpoint the regular weakness. It takes a lot to generate that signal. It just doesn't mean the market's down by a tad. It means that a few things happened and it generated a negative price momentum when you get that red arrow. Now, when you get a red arrow on a weekly basis, it's signifying that there might be some relative weakness in the course of the next 2, 3, maybe 4 bars later. That's what, 2, 3, 4 weeks. So it's a higher time frame, which means longer regression to the downside if that signal is validated. How would it be validated? Follow through weakness. Going into next week, we start to see markets close lower on the daily charts. That's what we'd be watchful for. So moral of the story is, if you look at the weekly column here, we've got the Dow Jones, we've got biotech, we have the Russell, we have the insurance companies, we have the builders, we have materials XLB, and this was a surprise. If you note here, industrials generated a new fresh sell signal. What generated a buy signal? Bonds. So instead of getting the flight to quality and the rotation out of bonds and into equities, we've got the opposite happening. That's by the virtue of the breakout that we gained in TLT. So the rest of the scope, you'll notice these are all fresh new sell signals, fresh new buy signals, but we have GDX that has been in a weekly sell. It was positive on the week, but it's in a trading range. It didn't negate it. ITB, and here's one that most Dow theorists can't ignore. It's transportation. It's been in a sell signal, and as you can see, when a market or an index or a stock goes into a weekly sell mode, when it goes into sell mode, it means that the price is under duress or relative weakness. So if we are to see recovery, and if Friday's price action was over accelerated, then we need to see transports come back, we need to see energy come back, financials come back, industrials come back. There's too many sectors that ended up with not just a 60-minute sell or a daily sell. There's too many sectors that ended up in a weekly sell mode. That's not a good sign. And it's not just a weekly sell mode. Let me punch this chart back up on the transports. Note that we also closed less than the prior week's low. There's the prior week's low, that green right there. We closed below that line in the sand. So that does do what? To me, it signifies that we may see further downside. The relative strength, Pearson's market catcher, the PMC, the relative strength is still negative. And then what about the volume? My volume trend tool, if you look here, the momentum of the volume is pointing down, and we have a red bar. So that signifies that there's more likely to see follow-through weakness coming into transports, and that's one of the sectors that's just been, well, hit pretty hard, especially in the airline space. So wrapping this up, guys, ladies and gentlemen, what is good? Well, we note that we have so many new weekly trends in the marketplace. We know that a lot of the green buy setups are now being reversed into sell mode. XRT is retail sector. It generated and is causing not just a weakening price, but it also closed below the prior week's low and formed that maroon candle, which is a low close doji, opening the door for more relative weakness coming down the pike. That's the scary part. So looking at the weekly charts, what did the rest of the markets look like? So we'll just go down, and I just want you to feast your eyes right here on weekly signals. Anything that was green is now red. So in the material sector, Albemarle, Freeport-McMoRan, everything else was already red, which is mean it's in a sell mode. It just says that a lot of the stuff that was green went and flipped into red. Now, Devon Energy, it was a negative stock, but it popped into a buy. So some of the energy names are, if you notice here, half of it's red, half of it's green. That was the materials, I mean. If you look at the energies here, which is what I want to focus on, some of it's still pretty positive on a weekly basis. In fact, Noble Energy, NBL, Noble Energy actually popped into and closed higher in the week. That's a good sign. So relative to the rest of the market, let's take a look at Noble Energy. Do you see this reading right here? 3.47. That's the person's market catcher. Let's take a look at it. So the relative strength tool is bright blue. Volume is up. Well, on the day the stock pulled back, but that's okay because on the week, the weekly charts, the higher time frame, it's in an uptrend. So that to me is, not all looks really relatively bad. It looks like to me we have a little bit of a potential sector rotation movement coming in the market. The trend is up. We see stronger volume coming into this market, and we closed above lots of old highs. That's Noble Energy, NBL. That's what we want to look for, is how many stocks are green with positive, again, positive relative strength. You may hear me talk a lot about that because if you're looking to sell, you want sell signals and you want stocks or sectors that are underperforming the market. Now, it is duly noted that the financials, Bank America, is now relatively showing a weakening condition against the overall market. The relative strength, bright red, sell signals galore. Everything's red in the financials. The one stock that we wanted to buy on the pullback, which we did get filled on, is Wells Fargo. So relative to the rest of the market, Wells Fargo is still a little bit better off. You can see the reading here. Where does it say negative 1.42? Morgan Stanley's only negative 0.24. So it's negative, but it's not as negative as, say, Bank America, which the reading is negative 7. That's a bad sign. That means the market, in terms of percentage, is losing more value relative to the S&P, and it's losing more value relative to the market than, say, Wells Fargo and Bank America. So believe it or not, while it may not look good, buying a pullback, the pullback is still, and you can see, what was Bank America down? 4.5%. What was Wells Fargo down? 3%. So even the math adds up there that the decline in Bank America was greater than the decline percentage-wise in Wells Fargo. That's something institutions, that little devil in the detail, that's something that I think a lot of institutions will be picking up on in the days and weeks ahead if this market does find support and buyers down below the market. Now, what are we going to do for Monday? For first thing on Monday, let's see if we get some kind of dead cat bounce out of here by mid-session. I always like to look after the first hour of trading to see how the numbers, that's why we have this other page here called the short term. You'll notice as soon as I get it into focus for you, there it is. See where it says interval 60 minutes? That's the first hour. I want to see what the strength or weakness of a stock sector is after the first hour. If we get a buy signal and we start to trade off support, we get some volume into the game, very good sign. So that's what I'll be watchful for after the first hour of trading Monday. I would like to see, because the momentum is down, I would like to see further weakness in the market. There's a lot of sectors that I want to buy on that dip. The question begs, is the dip another 1%? Is the dip another 3%? That's the key we have to be watchful for. Stocks that I believe that will be pretty powerful are in sectors that start to gain seasonal strength in the month of April and May. Still technology, some of the biotech, believe it or not. Retail, I think there's two names that we want to maybe look at, Ralph Lauren and, believe it or not, Abercrombie and Fitch. In social media, you'll notice that Twitter was like literally the only stock that was positive on the day. It still has a bright blue PMC reading. That means that it's completely outperforming the market. Groupon's another one that's outperforming the market. Google, looking at Zayo Holdings, that's another one that's outperforming, ZAYO. So in some of the social media or that's what I put it in under their new technology kind of names or new type of momentum names. I want to stick to the stocks that are still relative to the overall market outperforming. If they're in technology, they're probably looking at further gains on a decent pullback. So I want to stick with the strong stocks. If you note here, as far as the relative strength, look at the drug stocks. They were down hard. I mean, some of them like Thermo Fisher, I think that is. Thermo Fisher here down almost 3%, 2.5%. If my eyesight's not going crazy, 2.87, I think it is. If you notice here, it's still in a weekly buy. It's still an uptrend. It just pulled off the highs. It's not showing that it's currently collapsing in the market, right? So we'll be watchful to see if that trend holds up. You've got a lot of names here if there are bright blue. So while it may look bad on the surface, it probably isn't. I don't give a lot of attention that it deserves in the pot stock because everyone else has. But I think that there will be some good value, and there's a whole lot more names. These are the popular ones. There's a whole lot of popular names in this space. One that we talk about in the live trading room, and this is, and let me bring that into speed here for you real quick, and we'll wrap this up. All right, so here's our Thinkorswim. This is the main trading room. Here's the, let's expand this, maximize sell. So this is Zenerba, if I'm pharmaceutical. Zenerba Pharmaceuticals. You can see we've done some work. It had a resistance up here. We're telling people, I don't know about buying it up there unless it closes greater than I would look for a buy. We didn't close greater. I like the fact that the relative strength, the PMC indicator, is showing outperformance. It's trending up. The stock pulled back. It did not do that bad as it could have in light of Friday's monster sell-off in the S&P 500. So this is one that I would probably say I would welcome for anyone out there a pullback to like it. I don't know if we'll get it 522. We were kind of just looking for a pullback to this green line, which is that little benchmark. So we wanted to see a pullback somewhere into this zone here, and look where it is. It held the pivot, which is the pink line, and it held the 5.5 number, 550, 560 low. So I think if we get a short-term pop, what's a short-term pop? Define short-term pop. Well, let's call it a 60-minute. You can go 30-minute. Or if we close back above the daily pivot, buy into there. Now, I have way too many lines that I started to, so I'll get rid of those for you. And we don't need that many lines. But one of the things that I would say looks very positive, and just to share with you, for this particular stock, notice that on Friday, very few names generated 60-minute buy signals right on the close. This one did. So Monday, despite the overall market, man, if it closes, gives me a 60-minute buy and starts closing north of its pivot target, this is one that has some good strength. I would be more welcomed for a pullback to buy, but I also have to note that it is outperforming the market, and you can see clearly that bright blue dictates it's outperforming the market. Just like over here, a bright blue line in the sand on the PMC indicator. Look at that. With strong volume, it got a little buy signal right there, and then it had a nice little trend to the upside. So when we start to see bright blue outperformance and we can get an uptick in volume, I want to take a part of that. You're going to start to see other traders, institutions, money managers probably jump on that wave and buy into the market. So whether you're not into the pot names, that's a different story, but at least that kind of setup, you understand what we're looking for. Lastly, Intel. One of the things that we talked about were Intel. We didn't trust the market up here. I thought maybe bearish neutral. I didn't think it was going to crash that much. I said an unweighted butterfly like 8 to 10. In other words, be long like 8 versus 10 short. So in other words, if you're long maybe 5 52.5 strike call options, you would be short the body times 2, which would be short 10, and that would be the at the money double nickel, and then have maybe 3 unweighted to the upside of the 57.5 to reduce your cost basis. If the market stays between, of course, 52.5 and 55, you're going to collect in more premium. Now, the April options, the neat thing about the monthly option expiration there is they had 28 days. We lost another weekend. And if Intel just sits right in this zone between 52.5, 55, it's like nirvana. And that's what I think the market is capable of doing. We noted that the relative strength was weakening. We gave that out in the video. And again, we also told the traders in the room, that's one strategy that you can look at, or you can just simply buy or at least sell a credit call spread. In other words, sell the 55 strike calls and then buy the 57.5 against it for protection just in case I'm wrong. Remember, there is no guarantees in this world. Anyway, I hope you enjoyed the little wrap-up and the follow-up that we wanted to put out for you guys and where this market looks like it's going. What is the condition of those sell signals? Is it on strong volume? Is it on death-defying weakening breadth? And the answer is it's still mixed. The money is in the technology-laden queues. The money's outflowing on the Russell, and you can clearly see the effect of the negative weight of the small cap regional banks. That's what's played havoc on the Russell. Watch that IWM for that support level in the next coming days and week ahead. Thank you all very much. We'll update you with more videos. Have a great weekend.